Now, everybody likes a sweet treat, and Prataap Snacks wants to garner a pie in this space. The diamond chips maker, who is so far concentrated only in the salty space, says sweet snacks have higher margins and could have a bigger market too. So, what's the way ahead for Prataap Snacks from here on over the course of the next 2, 3, 5 years? Let's put that question across to the company's managing director and chief executive officer, Amit Kumat. He joins us right now on the show. Amit, good having you. Thanks so much for joining in. Now,
good morning.
Tell us, what's the focal point for Prataap Snacks over the next 2 or 3 years? Would you pay a larger emphasis, or would you put a larger emphasis on reaching into regions which you haven't reached so far, or would you look to reach into categories which you haven't reached so far? For example, this sweet snacks category. What happens over the next 2 or 3 years?
If we talk about savory snacks, we have yet to cover 40% of the India. We are not that strong in southern part of the country. We want to cover southern part of the country, a little bit of Gujarat and Punjab and UP area. But sweet snack category is a different area, and we feel a lot of heat is there and a lot of requirement is there in the country. The current outlets what we are serving, B, C, D class outlets, there are very less sweet snacks available. So the target point is 5 rupees, and to provide a good sweet to the kids who are not getting it right now. We have recently launched Yum Pie, and we plan to launch 2-3 new products in next 3-4 months.
Okay, interesting. So here, let me rephrase my question. Would this venturing out into this sweet snacks category be the focal point for the near term, or would you spend more time and managerial bandwidth in expanding into regions where you don't have a larger footprint, say South, for example?
Unfortunately, both together.
No, fortunately both together maybe. But okay, I was just trying to
both together. Yeah.
Okay.
Both together.
Okay, fair call. The last 3 or 4 years, Amit, you've had growth rates which are quite enviable. You've probably grown at 1.5 to 2 times the industry growth rate. If I'm not wrong, 27% per annum for the last 4 years. Do you think it is achievable, a 25% CAGR growth rate for the next 3 or 4 years, considering that you're much larger in size than what you were 4 years ago?
I think we are targeting somewhere close to 18 to 20% growth for next 2-3 years time.
Okay.
More than 18 to 20% would be difficult, considering the market scenario. The market is growing at less than 10% currently. So if we can grow by 50 or 70% more than the market, that would be good for us. That's the target. On a larger base, it is difficult to grow at 27%.
Yeah, I was thinking about that too. But this 18 to 20% optimistic growth rate that you're painting out as well, would that happen necessarily by tapping the new markets, or you would do well and reach those numbers even if you are not very successful in the newer ventures that you're trying to do?
Definitely, that's the target. We feel that we will be successful in the new launches, but if we are not successful, then also probably will reach this 18 to 20% growth mark.
So you're saying that the organic growth by itself is enough to take you to that 18-20% growth rate, and the newer markets will only add on to those numbers? Is that a fair estimate?
No. The newer market with basically a new product, both put together, we are envisaging 18 to 20% growth. But as you mentioned, if the newer product doesn't click, which we don't think would happen, then also we are targeting 18% growth.
Okay. Let's talk about a couple of things that you're doing. I think Edelweiss had an interaction with you. They have put out a note about the conversation that they had with you. 2 or 3 things. You answered one of the questions, which is they're launching 5 or 6 products over the next few years. I think you mentioned that you will launch 3 or 4 products over the next 6 months, if I'm not wrong.
Right.
Okay. So that is one. Would these new products be in the higher margin category for you as a company? Is there a conscious effort?
The sweet snack category is a higher margin category, and we are targeting 2-3 products in the sweet snack category, which should give us good margin. We have already test launched Yum Pie and targeting to launch Choco Pie and probably Berry Pie in next 3-4 months time.
Okay. How large can this sweet snacks category become for you as a company over 3 years? Amit, right now there would be 0% of your overall sales, I would presume. How large can it become?
I think we are targeting somewhere close to 200 crores in next 2-3 years time. 200 crore category for us.
200 crores in the next 2-3 years time. That will be interesting. I mean, estimates are that you would probably clock in about 1500 crores of revenue in FY20. Assuming that that's a right estimate, you were saying about 300 crores could come in from the sweet snacks category. So that's about a 20% contribution.
Right. 20%
contribution of a higher margin product. I'm guessing that has the power to elevate your EBITDA margins as well from the current, 8.5% that people expect you will clock in FY18?
Right. So basically going forward in next 3 years time, we should be close to 9 to 10% margin. But currently we are targeting somewhere between 8 to 9% EBITDA margin.
So if all of this is to be put together, Amit, and let's assume that God willing, you grow at about 18 to 20% CAGR for the next 3 years, and your margins move up from this 8% to about 10% as well, there is enough chance for your bottom line numbers to grow meaningfully, because I don't think you're planning to take any higher debt or otherwise.
We are a zero debt company right now, and we don't think we will be requiring debt for next 3-4 years.
Yeah. So is it safe to presume
the bottom line should improve?
Yeah. You say, yeah, bottom line would improve at a higher pace than the top line growth?
I think it should be equal. Bottom line is very difficult to predict, seeing the raw material pricing scenario in the country. So there's a lot of volatility in the raw material pricing. But I feel that clocking somewhere between 8 to 10% is very much possible. And if the sweet category improves the way it is improving right now, and we get a 20% market share, we would be closer to 10% margin in 3 years from now, EBITDA margin.
Okay. Let's talk about your strategy of expanding footprint in the South. I think you're tying up with contract manufacturers. There is a term called super stockists that I ran into one of the reports as well. Can you give us some details here?
So we have started three third-party manufacturing operations, one in Calcutta, one in Ahmedabad, and one in Bangalore. So previous to this operations, we were supplying potato chips from Indore. Now we can produce potato chips in Bangalore, Ahmedabad, and Calcutta, supply to the respective market. So our capacity has increased by almost 50% in potato chips. Secondly, number of super stockists are the people who we directly supply, and they supply to the distributors, and distributors then supply to the retailers. So our target is to increase the number of super stockists in southern India by 25 to 30%.
Okay. And all of this would lead to about an 18 to 20% growth rate, which is a healthy thing. Just one final question, Amit. Have you gotten over the GST hiccups completely?
Almost.
There is
little bit disturbance in the wholesale market in eastern part of the country, and I think 1 or 2 quarters will further require to get it over 100%. There is a little bit hiccup in the north and east part of the country.
That would be true for the industry at large, I presume?
Definitely. But for us, the eastern part is a very good market revenue. We are 33% of our revenue comes from eastern part of the country. And for the industry, it is only 19%. So it is more important for us to come out of this wholesale issue right now.
Great. Okay. Amit, it was a pleasure chatting with you. Thank you so much for taking the time out and speaking to us. And we wish you all the best for your growth strategy over the course of the next 3 years.
Thank you.